Building a business credit profile is one of the most important steps for any entrepreneur who wants to secure funding, attract investors, or simply protect personal finances. Many small business owners do not realize that their company can have a credit identity completely separate from their own. With a strong business credit profile, you gain access to higher credit limits, lower interest rates, and more trust from lenders, suppliers, and even clients. The best part is that building this profile is not complicated. It just requires consistency and smart steps. In this guide, we will break down exactly how to build a business credit profile for funding step by step, in a way that anyone can follow. Why business credit matters. Business credit is like your company's financial reputation. Just as personal credit shows how responsible you are with money, business credit shows how trustworthy your company is. Lenders, vendors, and even potential partners check it before deciding to work with you. With strong business credit, you can borrow without relying on personal credit, negotiate better terms with suppliers, and access growth opportunities faster. Without it, you may be stuck using personal cards, risking your assets and paying higher costs. Step 1. Form a legal business entity. The first step is separating your business from yourself. If you operate as a sole proprietor, your personal and business finances are legally tied together, which makes it hard to build independent business credit. Instead, register as an LLC, corporation, or similar legal entity. This creates a business identity that lenders and credit bureaus recognize. It also protects your personal assets if the business faces financial challenges. Get an employer identification number. Just like your social security number identifies you, your employer identification number identifies your business. You need an employer identification number to open business bank accounts, apply for credit, and file taxes. It is free to obtain, and once you have it, your business officially has its own identity in the financial system. This number will be used by lenders and credit bureaus to track your company's credit history. Open a business bank account. A dedicated business bank account is essential. It separates personal and business finances and proves your company is legitimate. All business income should flow into this account, and all expenses should be paid from it. This consistent activity not only makes bookkeeping easier but also shows financial institutions that your business is real and active. Many lenders require at least 3 to 6 months of bank statements before considering funding. Register with business credit bureaus. Unlike personal credit, which is tracked by 3 main bureaus, business credit has its own reporting agencies. The most important are Dun & Bradstreet, Experian Business, and Equifax Business. Start by applying for a free DUNS number from Dun & Bradstreet. Many vendors and lenders report to them, and having this number allows your business credit profile to officially begin. The earlier you set this up, the sooner your business can start building history. Establish trade lines with vendors. One of the fastest ways to build credit is to work with vendors that report payments to credit bureaus. These are called trade lines. For example, office supply companies, wholesalers, or even service providers may extend net 30 terms, meaning you receive goods now and pay within 30 days. When you pay on time, this positive history is reported to the bureaus. Over time, these trade lines strengthen your profile. Start with 2 or 3 vendors that report and build from there. Get a business credit card. A business credit card is a simple tool to build credit while managing expenses. Use it for small, regular purchases like software subscriptions or supplies, and pay it in full each month. This creates a record of responsible credit use, which boosts your score. Many business credit cards also come with rewards tailored for entrepreneurs, such as cash back on office supplies or travel. The key is to use it consistently but responsibly. High balances or late payments hurt your profile. Pay every bill on time. On-time payments are the foundation of both personal and business credit. Even a single late payment can harm your profile. Set up automatic payments where possible and monitor due dates carefully. Remember that vendors, utilities, and lenders may all report your payment behavior. Consistency is what builds trust. Over time, this history of timely payments is what convinces lenders to extend larger amounts of credit or funding. Keep your credit utilization low. Credit utilization means how much of your available credit you are using. If you have a credit card with a $10,000 limit and you consistently carry an $8,000 balance, your utilization is 80%, which looks risky to lenders. Try to keep utilization under 30%, ideally under 10%. This shows you are not dependent on credit and can manage money responsibly. Monitor your business credit reports. Just like personal credit, business credit reports can have errors or outdated information. Monitoring your reports helps you catch mistakes early and dispute them. Dun & Bradstreet, Experian, and Equifax all provide access to your reports. Make it a habit to review them at least quarterly. You want to see which vendors are reporting, confirm your payment history is correct, and track your scores as they improve. Gradually apply for larger credit lines. Once you have established some history with trade lines and a credit card, you can apply for larger credit accounts, such as a business line of credit or equipment financing. These bigger accounts strengthen your profile even further. The key is not to rush. Apply gradually, and make sure you can handle the credit responsibly. Every time you take on credit and pay it back, you are signaling to lenders that your business is reliable. Separate personal and business credit completely. Many new owners make the mistake of signing loans with personal credit or using personal cards for business. While this might be necessary at the very start, it keeps your business dependent on your personal profile. To truly build business credit, you need to operate separately. Over time, aim to use only business accounts for expenses and credit. This not only protects your personal credit but also strengthens your company's independence. Build relationships with local banks and credit unions. While large banks are important, local institutions often provide more personalized service and flexibility. Building a relationship with a community bank or credit union can make a big difference when you need funding. Keep them updated on your business growth, share your financials, and show consistent deposits. When the time comes to request a loan, they already know and trust you. Show strong financial records. Business credit is not just about payments, it is also about the overall health of your company. Keep accurate financial statements such as profit and loss reports, balance sheets, and cash flow statements. Lenders often request these when evaluating funding applications. By maintaining clear, professional records, you reinforce the strength of your profile and increase your chances of approval. Use credit responsibly during growth. As your business grows, it is tempting to take on as much funding as possible. The key is balance. Use credit to invest in growth opportunities, like marketing, equipment, or staff, not for unnecessary expenses. Lenders and credit bureaus see patterns. If your borrowing leads to measurable growth and profits, your profile improves. If it leads to reckless spending, your profile weakens. Reinvest in your credit profile. Think of your credit profile as an asset. The stronger it is, the more opportunities it creates. Reinvest time and effort into strengthening it. Apply for new vendor accounts, expand your trade lines, and maintain spotless payment history. Over a few years, your company can move from having no profile to qualifying for significant loans or lines of credit that fuel expansion. A practical example: imagine you start a small marketing agency. In year 1, you form an LLC, get an IN, and open a business bank account. You apply for a business credit card, use it for software subscriptions, and pay it off every month. You also open Net30 accounts with an office supply company and a printer, both of which report to credit bureaus. By the end of the first year, you have 3 trade lines with positive history. In year 2, you apply for a small business line of credit and qualify because of your clean record. By year 3, with steady revenue and strong credit, you are eligible for a larger loan to expand your team and office. That is how a simple, consistent process builds a powerful business credit profile. Mistakes to avoid: do not ignore your credit reports. Errors can hurt you. Do not max out cards or miss payments. These damage your score. Do not mix personal and business finances. This confuses lenders and weakens your profile. Avoid applying for too much credit too quickly, as too many inquiries look desperate. Finally, do not assume that paying bills not reported to bureaus helps your credit. Focus on accounts that actually build history. The long-term payoff. A strong business credit profile does more than unlock funding. It protects your personal finances, builds trust with vendors, and positions your company for growth. It also gives you leverage. With good credit, you can negotiate better terms, lower costs, and take advantage of opportunities competitors cannot. In many ways, building business credit is one of the smartest investments you can make in your company. Thank you for following this detailed guide on how to build a business credit profile for funding. If you found this valuable and want more step-by-step strategies to grow your business and money skills, make sure to subscribe to our channel Success Lens, where we turn complex financial topics into simple, practical lessons you can apply immediately.